Great, welcome back. So far, if you've been following along, we've talked about how the Darwin data analytics available to you via the Darwinex FTP servers complement the data that's otherwise available to you via the Darwin API itself. We've gone through some getting started content where we talked about how to access the data, how to download it via FTP in your Python environment if you're using Python, and gone through a few use cases, studying some of the sub-data sets for each Darwin that are available. In particular, we talked about order latency, return, monthly, simulated and real investor divergence data. Before we continue any further, it's important that we do a quick recap of what the Darwin asset represents compared to traditional asset classes that we're all used to trading. For instance, futures, FX, options, stocks, cryptos, indices, etc. By definition, the Darwin asset is a multivariate, high-dimensional time series compared to any traditional asset that is univariate or bivariate at best. And what that means is, for instance, consider an over-the-counter product such as FX, where you're provided time and price. Consider an exchange-listed instrument where you may be provided time, price, volume, and depth level information. In all of those scenarios, you're presented with a time series that has low signal-to-noise ratio, that has a very finite dimensionality. You've got very few things to study and hence be able to model a solution with, a predictive solution such as a trading strategy. And that makes financial time series some of the most difficult data series to model for predictive output in the world. So the very first key differentiator between the Darwin asset class and traditional asset classes is that the Darwin asset class, by virtue of being powered by traders and their behaviors and their choices and the particulars of the risk and asset profiles, is a multi-dimensional time series, is a multivariate time series by definition, where the final price, the quote of any asset, is driven by all of those actions, all of those behaviors. What makes the Darwin asset different to traditional assets is that alongside the final quote, the final price of the asset that you have available to you, you also have time series of all those actions available to you alongside it through the Darwin API as well as this FTP data repository. And by having access to a larger breadth of information in this way, the Darwin asset class presents data practitioners, quants, algorithmic traders with more opportunities in terms of the amount of data available to them in order to model a solution that can predict future evolution of any particular asset or portfolio of assets with more information to use than a traditional asset will offer them. That's one of the key differentiators in terms of data itself. The second differentiator to take note of is the risk profile of the asset compared to traditional asset classes. While the Darwin asset maintains a fixed value at risk target over time, which makes any Darwin asset comparable to other Darwin assets on the exchange, given that they all evolve with a similar fixed value at risk target, this is not the case with traditional assets, where each asset within that asset class will have varying levels of behavior in terms of volatility and profile over time. And thirdly, again, by definition, since the Darwin asset is modeled over the behavior of a trader and is a tradable instrument on its own, there's a case for being able to identify robust portfolios of Darwin assets that can be constructed over time so as to leverage the talent of the traders powering these Darwin assets instead of having to model the trading strategy yourselves on the underlying that these traders are trading. Think of it this way. Let's say you have the euro dollar as a row price series, and then you have a trader that also trades the euro dollar who is listed as a Darwin asset on the Darwin exchange. Let's actually go find a trader who does trade the euro dollar as one of several assets traded in that trader's portfolio. This is Darwin LVS, for example. If as a trader, as a modeler, you're presented with two price series, one of the euro dollar and the other of a trader trading the euro dollar, both these price series being tradable themselves on an exchange or execution venue, by being able to create robust portfolios of Darwins trading underlying over time at fixed value at risk target, the possibility to bypass the need to create a trading strategy on the underlying becomes very real. The challenge, however, remains of successfully identifying such Darwins that can robustly exhibit performance behavior over time on the underlying that are otherwise difficult to model themselves. By being high dimensional in nature, by having all of this data where not only the price series is available to you, but also all the underlying behaviors that drive this price series available to you in time-weighted fashion, down to granular level detail such as position level detail for Darwins that have opted to share that information with the public. As a data practitioner, as a quant, an algorithmic trader, or data scientist, you're presented with a time series that has a lot more information to assist you in the alpha research process as compared to a traditional asset that has a very finite feature space composed of primarily time, price, and possibly exchange level depth and volume information. In the next few tutorials, we're now going to go into tick level quote data for any particular asset of your choice, any Darwin asset of your choice, and then we'll go into all the additional behavioral data that we have available via FTP in order to run some interesting research on behavioral data available to us and how the evolution of any particular Darwin asset correlates with the evolution of those behaviors over time. So it'll be fairly interesting and exciting to look at how empirical data about behavior could possibly be used to explain empirical evolution of a particular Darwin asset over time, and what opportunities this presents to us as traders, as data practitioners, in terms of modeling portfolios of Darwins that are forward-seeking in terms of returns. As always, if you enjoyed this presentation, please do consider sharing it with your social networks, colleagues, co-workers, and friends. And do subscribe to the Darwinex YouTube channel so you remain up to date with all future videos that will be released in this series and other topics discussed on Darwinex. Thank you very much for your attention. See you next time.